Hello, everyone. Thank you very much for joining. We have half an hour trying to talk everything about what's happening in Japan as much as possible. We have perfect speakers with me representing the leading sovereign wealth fund through leading pension fund and leading venture capital and university and leading traditional asset management companies being run by America as well. So I just want to give you some background as to why it's so important for us to talk about Japan in Miami. It's a big deal, right? Because flying from Tokyo to Miami is expensive and time-consuming. But at the same time, it's very difficult to convince our stakeholders that we are not here for beach or vacation, right? We are here for business. Each individual is representing quite sizable organizations, so we have to deal with very significant bureaucracy as well. So here's a brief introduction to FinCity.Tokyo, which is an extension of Tokyo Metropolitan Government to promote and upgrade Tokyo as a financial hub and ecosystem as well. It's very important because we are experiencing significant social issues such as aging populations and the huge deficit of the government, etc. So we need to turn around. Otherwise, our economy will be doomed. Quickly, here's the FinCity.Tokyo. Our mission is to disseminate what's going on in Japan without any propaganda, as it is. And we obtain honest and candid feedback as much as possible from market participants like yourselves. And also, we try to attract highly talented financial professionals to Tokyo so that they can inspire and also they can train up our people. We have been doing this very successfully in baseball and soccer, football, even sumo. So we have to do the same for investment too. And then last but not least, we put together a policy proposal to the central government to make Tokyo/Japan more investor-friendly. We have speakers representing different institutions and also different aspects of the investment ecosystem, starting from a government agency, sovereign wealth fund, and then endowment, pension funds, and then asset management, GP, etc. So that's why we have perfect people in front of you. Okay, so I'm going to hand over to Naoya, who can talk about his institution and his mission.
Yes, thank you. Thank you for to have an interest in the Japan session. And my name is Naoya Sugimoto in Japan Science and Technology Agency, which is one of the government agency. And I'm co-chief investment officer of Japan University Fund. And Japan University Fund itself is a little bit confusing name. So people thought that we are one of the university fund or some of the deep tech venture capital. It is not. So we are a sovereign wealth fund for university. So the government initiated, 3 years ago, the government initiated to create a fund with the $78 billion to support the universities to be world-class research capabilities. And then we utilize the global financial market for everything, like public equity, fixed income, credit, private equity, private debt, and real estate and infrastructure. So we are institutional investors to support financially the universities. And that's to support the science and technology of Japan in the future. So that will be a very good opportunity in the fundamental, long-term fundamental opportunities to invest. And then I saw you and many of you wearing the yellow strap, which means the managers. So I want to talk about also the business opportunity in Japan. So our primary mandate is to generate returns through the financial market. And the other mandate is to be a model case of the asset owners, or especially in the university endowments. So our mandate is to be sophisticated investors. So we, Japan University Fund, would like to invest various type of fund and management. So our mandate is maximizing return within the risk tolerance. The typical Japanese public pensions or public entity investors are mandated to reach a target returns with the minimum risk. But our mandate is to maximizing returns, which makes us more flexible investment. And we do global investments. So we do not have any home country bias. So typically, Japanese investors has the domestic equity, domestic fixed income, and the global fixed income and global equity. But we do not have that kind of domestic and global. So we are global investment. And also, in the Today Global Oats event, we do invest the alternative investments explicitly and then with the meaningful amount. So, and the final one is active management. So we use a passive through the index investment and also do use the active management. So this will be a good business opportunity to the global investment managers because we have $78 billion, and then we have to invest a various type of strategies with the sophisticated and advanced for the portfolio.
Thank you very much, Naoya. Thank you. So moving on to Shigeru, but Japan has many subscaled pension funds across the country. Many of them are so subscaled. And the government is trying to consolidate and upgrade investment capabilities. But Shigeru and his organization has been driving this effort without government support. So he can talk about how Japanese pension fund market is transforming. So can you talk about it?
Yeah. So hi, I'm Shigi Tamaki from Pension Fund of Japanese Corporations. So we as a defined benefit in the corporate pension fund, but a bit different from a typical defined benefit corporate pension fund. Because as you know, so the large Japanese corporations have their own corporate pension fund, just like Toyota has its own Toyota corporate pension fund. But that is only for one beneficiary, which is Toyota employees. But mid-small Japanese corporations don't have their own corporate pension fund. That's why we ask or solicit them to join us by using the intermediaries such as regional banks, local municipal organizations, CPAs, tax accountant, lawyers, and so on. And as a result, almost one company is joining our pension fund on a daily basis every day. So that as a result, monthly contribution to our pension fund is growing so rapidly by more than 35% year on year. So that's why we have to keep allocating the money to global talented funds, mostly alternative investment space. So roughly speaking, 90% of the total asset is invested in alternative investment space. One-third, roughly speaking, one-third in hedge fund, another one-third in private asset, last one-third in opportunistic, more niche type of investment opportunities. And as Aritomo-san, Keiichi mentioned, so there are about 12,000 corporate pension fund. Some of them are doing pretty well, pretty good, but the others, especially mid and small corporate pension fund, do not work quite well, unfortunately. So they are small, usually small, like having less than $100 million in a pension fund asset with no investment professionals, just invest in one principal guaranteed product, provided by life insurance company, so yielding just 0.5% or something like that. So that is ridiculous. So that's why we would like to consolidate those type of corporate pension fund too. But the difficulty is here. So that those person in charge of those corporate pension fund who do not work quite well is rotated. So the 3 or 4 years. So due to this, 3 to 4 years job rotations, so that they don't wanna make a big change during the service period. But during that period, if that pension fund financial status is deteriorating, so we can so no longer absorb it. That is a problem. So that's why we would like to government to promote Japanese executive, especially mid and small companies, to consider so seriously on consolidation of Japanese pension fund. That is my brief explanations.
Thank you very much. Everyone knows that Japan has a good education, and the best university in Japan is known as University of Tokyo. University of Tokyo has been producing a lot of smart kids, joining government agencies and largest corporations. However, things have changed so much. Recently, 30% of graduates join startup companies or even starting their own companies. Junji Kevin is representing a venture capital arm of University of Tokyo, and it's very important to understand what's happening because they are trying to become more relevant to the market. So, Kevin, would you like to briefly introduce yourself and your organization?
Hi, my name is Junji Takaoka. Everyone call me just Kevin, so call me Kevin. But so I'm representing University of Tokyo Venture Capital Fund, and the first thing I want to say is, right now Japanese startups have full potential, of global growth. Well, let me just show you this page first. So sorry about this mess, but the Center Astroscale got an IPO last year. It's one of our portfolio company, and the initial valuation was like 1 billion. So it's literally unicorn. So we're experiencing big IPOs and big name on day, from Japan, and we're now, trying to, increase the number of those, big IPOs and name on day. So very big, opportunities. So usually when people think about Japan, maybe Sakura or Mount Fuji, right? But actually, more and more younger, and maybe people might think Japanese people are more conservative, like more like hardworking guys. But actually, younger generation are more startup oriented and entrepreneurs. As you can see, in this data, 600 new startups right now. And each year, we are running by far the largest accelerator program, and we accept newly born 600, startups every year. And we are actually not only running a venture capital fund, we're also the LP limited partners for venture capital firms too. 20% goes to the venture capital firms, so and the other 80% goes to direct investment. Altogether, we have our fund itself is 500 million funds, but with those venture capitalists and other co-investments, we have already invested almost $1 billion for the past 10 years. Okay, so far that's my job, and I hope to explain more about the opportunity in Japan.
Okay, so David, I'm gonna ask you some question. You have been running the most conservative, considered to be the most conservative and largest financial institutions from an asset management perspective over the last several years. How do you feel about this, running a Japanese organization, being American?
As an American, well, first of all, thank you very much for inviting me. It's great to be in Miami. I actually grew up in South Florida, and originally went to Japan over 40 years ago. With a few big firms. You've heard of BlackRock and Merrill Lynch. Lived in London, lived in Tokyo, lived in New York. But I think the word is change, and change is very good in terms of what's going on in Japan. My colleagues here, all of them, are in organizations that were set up between 3 and 7 years ago. So in the 80s, the boom years, these organizations would not be here. The model, the business model and the social model of Japan has changed dramatically in these 40 years. And in terms of your perspective and my personal perspective, Japan has become a great opportunity to invest in as a market, and a great opportunity if you're interested in setting a business up to tap the financial resources that are in Japan. Remember, there's about 15 trillion US dollars in household assets that are locked up in bank deposits. That has to change, and it is changing. Sumitmo Trust Group, we're a trust bank. As Aritomo-san said, we're very, very conservative, and I chair the largest asset manager in our group. We're the trillion-dollar asset management organization that nobody's ever heard of, okay? We run our businesses through a number of subsidiaries. The model is quite different from a typical US asset manager. We have a open architecture platform, and so if you have an interesting product or investment strategy and you want to tap into that 15 trillion, you would come to ourselves or others like us, because what's happened over the years is that Mr. and Mrs. Watanabe, the typical sort of name of a retail Japanese investor, I returned to Japan 11 years ago. When I left 20 years ago, I was in London for 10 years, and I came back 11 years ago. I was shocked to see that Mr. and Mrs. Watanabe's non-bank deposit asset allocation went from 80-20 Japanese assets, foreign assets, to 20-80. I should say 20 Japanese assets, 80% they're allocating globally. And who's the beneficiary of that global allocation? We, the Japanese asset management industry, we do the client servicing, we talk to them, we give them advice on how to invest, but the beneficiary are people like yourselves sitting in the audience who provide the products, who provide the investment strategies, because we're tapped into, on our open architecture platform, we have 70 managers, 80 managers, and that's across traditional long-only, liquid strategies, fixed income, equities, private assets. We have a venture capital group, we have a private equity group, and whenever we come here to the United States, we talk about this. I think Americans are very, very focused, as Keiichi said, on the domestic markets, but actually Japan is back. Just ask Warren Buffett. He allocated many, many billions, and by the way, immunized his yen-dollar risk very, very easily. And if you're a dollar-based investor, you actually get paid to hedge, given the interest rate differential. You don't pay to hedge, you get paid, you receive to hedge when you invest in yen. So there's a lot to talk about why Japan has now surpassed, the Nikkei has surpassed the 1989 high. That was a year ago. Corporate governance changes that are really happening. They're being implemented. We now have engagement in a lot of activist funds that are coming in and working with Japanese corporations. It used to be a very tough discussion, but now Japanese management is saying, okay, let us understand what you want to see. And maybe that plot of land in Tokyo that's still book value, back in 1955 book value, maybe we should sell it. And we should do a special dividend to our shareholders, and then keep some capital to grow. So Japanese corporate governance changes, which started in 2014 with the Stewardship Code and the Corporate Governance Code, which has been renewed, you're seeing an unlocking of assets for shareholders, and it's a great opportunity.
Thank you.
The government is totally behind it. Sorry, I know we don't have time, but the government's totally behind it, and FinCity.Tokyo is one of the mechanisms that is here.
Thank you. We actually have 5 more minutes to wrap up, but I'd like to share some important data points about Japan. Japan has about 3,950 public companies, while in the US, you guys have 4,200 listed companies, publicly listed companies. Right. Size of the economy, US is 6 times more than Japan. However, total market capitalization in the US is 8 times more, right? So, which means that we have many small public companies. In fact, 2/3 of Japanese public companies are considered as microcap, less than $300 million of market capitalization. Everyone knows maybe Toyota, Sony, Honda, Panasonic, etc. But we have many, many small companies completely uncovered, right? And then average IPO valuation, time of the valuation at the time of IPO is $70 to $80 million, which is equivalent to Series B in the US, right? So, so we have too many micro cap issues in Japan. So we have less than 4 minutes, but each individual can talk about how we can deal with this too many micro cap company issue as well. So maybe starting from Shigeru.
So the large cap names on sort of S&P 500 or sort of topics, so 500 index are covered, so almost 100% by sell-side analysts. And the same thing can be true of mid and small cap names on so Russell 2000 or BBG Europe DM, so the small cap index. But story will be totally different in topic small. So sort of only 27% of listed companies on the topic small index are covered by sort of analysts. So remaining 73% non-covered names. And actually where sort of many sort of hidden gems there. And sort of where sort of so first retailing, so the manufacturer of Uniqlo or Zozo used to be there, sort of uncovered sort of names, so many years ago. So the Japanese GPs, especially mid-small specialists or independent sort of Japanese boutique, sort of can prove their ability to degree those uncovered names and identify sort of good hidden sort of gems, then they will surely sort of attract the money from globally.
Okay, Kevin is trying to scale before IPO. So can you touch on this?
So yeah, one idea is to nurture the existing public companies, but another idea is to again like the example of Astroscale, create. So they spent less than 10 years before it got 1 billion valuation. So. And the point is, it partnered with British government, not just Japanese government. So it went just focused on a global market. So there's a good potential, in Japanese startups. So if we, I wanted to ask for collaboration, outside of Japan, to nurture the startups to get the high valuation together.
Also, we have emerging managers program in Japan, and trying to allocate to emerging manager through emerging manager to small companies. So Naoya and maybe David can talk a little bit about this. We only have a minute and a half. Naoya, would you like to touch upon this?
Sure. So Japan as a country is promoting investment management industry. The Japan University Fund is one of them, and also. Government set asset owner principles, and then last year, and then they pushed that emerging manager is really important to grow the ecosystem or investment ecosystems. So this is a government initiative, and there are so many emerging managers, but currently it is a slightly gap between the asset owners and the emerging managers. So we're now promoting the intermediary, like fund of funds or gatekeepers, or FinCity.Tokyo is promoting to create a showcase to be visible. So that will be energize the Japan emerging market program.
David, can you also wrap up?
Finally, yeah, you don't want small companies. Put pressure on the brokers not to list them too early.
Right.
That's the reality. It happens all over. But emerging manager program leads to the point of human capital and talent. And human capital and talent is absolutely needed in Japan. And it used to be human capital and talent in financial services and asset management was very domestic. Now we are open. There are many, many people from around the world who are coming and setting up and bringing their abilities into the Japanese market. And there's a lot of opportunity and benefits to partner with a group like FinCity.Tokyo. We have offices, we have equivalent of an accelerator program for asset managers and GPs, and you'll see that demand just grow.
Yeah, so as you heard, right, Japan is trying to transform. Even though from the US, Japan is quite non-eventful, right? We actually had 4 prime ministers over the last 4 years. You even don't know when the power was transitioned, right? But Japan is actually probably the only fully democratic and politically stable market and jurisdiction in Asia. You have to allocate to Asia, but where? So in this sense, it's very important for you guys to, there are lots of distraction, but revisit Japan and pay more attention to Japan so that we can work together as well. So fortunately, this is the last session here, and we're going to stay here so we can discuss further. But for now, let's please give a big hand to all the distinguished panel speakers.
And thank you very much. I just had one last thing.
We're over.
The sushi is the best. Please come and visit. Thank you.